Ladies and gentlemen, welcome to a new episode of the FinTech Hunting podcast. We have an incredible guest for you today. He's a technology evangelist, an industry thought leader, and he's a product and pricing expert. Please help me welcome Michael Vough, Vice President, Hedging and Trading at Optimal Blue. Mike, welcome to the show.
Thanks for having me, Michael. Honored to be on the show today and excited to kind of talk about some of the things that we're doing at Optimal Blue these days.
Well, it is great to have you. You have a wealth of knowledge and expertise. Let's first start a little big picture. We're halfway through the year. Give me a little bit of your perspective of kind of where the market is at, and then we'll start diving into product pricing, hedging, and more importantly, some of the cool things that Optimal Blue is doing.
Yeah, it's been an interesting year so far. I think a lot of folks are almost like pleasantly surprised or maybe just numb after the last couple of years in the mortgage market. When I was in New York for the secondary conference, our space was buzzing. We had meetings all day. We had a lot of high attendance. We're busy every day here, and it's a little different. It's a little different type of busy than during the mortgage boom time. It's less, hey, get these loans through, sell these loans, hedge these loans. It's more, let's focus on strategy. Let's focus on how do we get every little basis point we can out of our pipelines, and that's a main mission of ours at Optimal Blue is to kind of help lenders maximize that profitability on every loan that comes into their pipeline. But in general, right, we've seen rates come down a little bit here. As we get closer to the election, we've seen a little bit of downward pressure there. Not enough for what a lot of our folks expected at the beginning of the year. Beginning of the year, Fed expected a number of rate cuts, and that's bounced back and forth from 3, 4 rate cuts to none to one, and we're somewhere in that 1.5 range right now. I think we'll see a lot of that kind of shake out and formalize as we get closer to the election from a standpoint of what we're going to see from a rate standpoint. And what we hear from our lender base is they're all trying to do more with less, right? We've seen a lot of right sizing in the industry, which is really tough for everybody to go through. But the folks who are there today, who've survived the M&A waves and that we've seen, they're all planning for the future, right? They're what folks again thought was that survive till 25 mantra. Maybe it's a little pushed out a little bit further. Maybe we're looking for kind of a refi boom here in 26 or 27. That's where a lot of the prognosticators have kind of moved their kind of estimates for now.
Yep.
But the folks who are around, they're trying to get lean and mean, use as much technology as they can to try and drive down that cost to originate.
So let's talk about that a little bit because I think when we start looking at the market, the cost to originate, it amazes me with all of the cool technology out there, with everything, the cost to originate continues to climb. And in this market, it is not, it's sustainable if people are not profitable. They can't keep saying, I lost 500 a loan, I lost 1,200 a loan, I lost 2,500 a loan. So as you talk about the strategies, what are some of the things that lenders are focusing on from a profitability standpoint? What can they do to start getting much more strategic and focused on how do we get back to a time where we're more profitable? Because there may be a little refi bump, but I don't think there's going to be a huge refi boom. And if so, it's probably not going to happen in the near term. So what can they do?
Yeah, I think the main thing right now that folks can do is, you have to go back and revisit all of your strategies, all of your vendors, and you have to look for the vendor that is the right partner for you and has that end-to-end solution. So right now there's so much time spent making sure that all these disparate solutions connect to each other. And usually that's going to be on the lender, right? The lender needs to make sure that this data from vendor one or technology two connects to each other. So having where you can that closed ecosystem is really, really important. And then also from an actual like pricing strategy standpoint, there's a lot of things that folks can do there, right? Whether it's exploring pricing mandatory and hedging versus locking loans best efforts versus it's just the more complex pricing strategies. Maybe you can look at different servicing executions, right? We've seen some different co-issue players come out there in the marketplace. And there's also a variety of things that folks can do from different loan sale and hedging strategies, right? There's ways to tighten up your hedge effectiveness. There's ways to tighten up your pull through, right? These are all big things that go into that secondary P&L that we talk about, right? There's the whole concept of the margin you expect on day one, and then you have like the realized profit margin. Well, what happens, right? You expect to make a point on this loan. Well, maybe there's a concession or an extension or something like that, but most commonly there's a little bit of secondary gain loss, right? Maybe your hedge isn't as effective as possible. Maybe you underestimated pull through. Maybe your interest rate sensitivity was off compared to the actual market. Maybe you thought you'd make 10 bips on a loan sale and you didn't. Having the type of technology that allows you to pull all those levers and then look at the results and then make that feedback loop very tight is where we see folks actually start to really move from not profitable to maybe break even to profitable. Because when you think about the whole mortgage ecosystem, your originations are just an expectation of where those loans are going to execute in the secondary market. And if you have that all kind of wired together very nicely, it becomes very easy to say, okay, well, I did a loan sale yesterday. These loans did this. Well, let me turn my dials in my front end pricing system or my PPE and have that real time kind of feedback loop there.
So let's talk about that. What does an all-encompassing system look like for this option of whether it's hedging, whether it's improving the pricing, the product and pricing engine? Because one of the things that you hear in today's market with the cost to originate is a lot of people have gone after that flashy technology. They've gone after that shiny object and they've added a bunch of disparate systems. What do they really need to look for? And start walking me through what does that one all-inclusive system look like?
Yeah, absolutely. Would love to. Right now, I'll kind of go back to that example of the projected margin versus like realized margin, right? So, you think you're going to make a certain, price on a loan, right? And you have your PPE or that front end system, and that's how you're distributing that pricing out there, right? That's
Yep.
how you're locking in that day one price, how that lock gets into your LOS. But that expectation of the price that you expect is coming from your loan sales, right? It's coming on the back end. There's this whole primary and secondary market, right? The primary market is your LO and your borrower, right? And that's where we have the PPE that's putting out that indication, right? It's that indicative price of, hey, if you can give me all your different data points, well, then I can fine tune that and I could get that out there in the marketplace. But that's all based upon past performance, right? It's all based upon how profitable were you on this loan for that geo, for that FICO band, for that LTV over a period of time. And so when you have all these systems that are disconnected, it makes the aggregation of that performance and then how do you take that and then actually feed it into something that's actionable very difficult. And that's where I think Optimal Blue is like for a very interesting kind of path forward here because we cover that whole kind of secondary market lifespan, right? From the moment you think you want to create a rate sheet or a price, right? That it's a twinkle in your eye, that loan, to the moment in time when that loan's locked until it's hedged. And when you're hedging it, right, you're getting all these great data points, right? How effective is your hedge, right? How much money are you making or losing because of different things in the secondary market, right? Are you creating the most effective MBS pools? Are you selling to every option out there? Are you taking advantage of different selling strategies like being able to save the bid offer on a bulk AOT transaction? Are you how are you determining your servicing rate? How are you protecting that investment if you decide to do that as well? All of those are things that Optimal Blue plays in, and they all kind of feed back to that initial generation of that profit margin. So as things change, right? As your pull through changes, as your loan sales change, as your hedge cost changes, those levers, those component parts of that profit margin change. It's not going to take an army of rocket scientists to actually come up with a strategy, coagulate the data together from all these different sources, and then feed it back into how you talk to the primary market. it becomes that closed loop ecosystem where you're getting that tap on the shoulder saying, hey, check this over here, right? Your hedge cost has started to peel off. Maybe you want to increase your margins, or your loan sales have been very profitable recently. Maybe you should decrease your margins a little bit because you're actually making enough money on the back end where you could put a better foot forward on your front end pricing and incentivize a little bit more production. So it's things like
So what
that
I'm
where I think folks are
hearing
moving that way.
So what I'm hearing from you is that all-inclusive system in the secondary market, that platform that follows the whole life cycle, can then bring that data to actionable insights for the lender, right? So that they
Exactly,
can
exactly.
use the information and it's at their disposal because the mortgage industry, we've had huge amounts of data forever, right? For decades, but if it's not usable data, if it's not easily accessed, if it's not all together, that's where we have a lot of these data silos. People don't know how to use it and they start making bad decisions. Talk to me a little bit about how having that all inclusive system on the secondary side still has to interact with the other systems of the people originating the loan. And how does Optimal Blue approach that?
Yeah, we have a plethora of integration partners, whether they're LOSs, CRMs, POSs, et cetera, that can get our pricing in there. And on the hedging and trading side, similarly, right? We have a bunch of different integrations, whether it's an LOS or different investors buying loans, different agency integrations for whether, Fannie or Freddie are buying the whole loan or servicing strips, et cetera. And but I think kind of a really interesting thing that we're starting to explore, and we had a press release come out last week about this, is something we're calling our Profitability Assistant. And you talk about data and all the data that's spun off through these systems. It's a lot, right? And making it easy and digestible so that it could be distributed out in a company is something that we're spending a lot of time on, and we're investing in things like generative AI, for example. So that profitability assistant is really critical for this because what it does is it's actually going to create a blurb. Think about something that maybe like a junior trader might write, or maybe your head of cap markets might write that would explain to a CEO or a CFO maybe why you made or lost money overnight. So in a perfect world, if nothing's changing and you have a perfect hedge, right? Nothing, it should be flat every day, right? Now, that's not always the case. And so, for a variety of reasons, every day that kind of moves and moves and moves. And there's so many reasons why it could move, right? The yield curve could do this. Your pull through can go up and down versus expectations. An investor changes their pricing model. There's a spec pay up that moves around a little bit. And we have all this data in the system, but it took a seasoned cap markets expert to kind of look at it, throw out the noise, and distill it down to something that was decipherable to somebody who wasn't living and breathing capital markets. And so the profitability assistant will actually do that as a part of our base offering now, where your position is being recalibrated or readjusted every day. And in the morning when you come in, not only is there all this data that you could look at to decipher and get your hands dirty in, but we're also providing now this generative AI blurb that will basically call out the top 5 reasons why you made or lost money overnight, and it's something that we could then take and distribute to a CFO, a CEO, and it takes a little bit of the human bias out there, and it does it like that. I snap my fingers for folks who can't see, and then instead of it being a little bit more of an arduous process, I have a funny story on this one.
Please share.
When I first started in my capital markets world, I was a trader on a trading desk, and as I was getting familiar with the market, one of the guys who was training me was like, "Hey, you need to understand everything about this one position, this one client, and if you do that, then it's really easy to like branch out and understand a lot more." So one of the things I had to do was every morning I had to write up this blurb that was about why my client made or lost money, and I would call out these X reasons why they made or lost money, and I had to have it in to the guy who was training me before 8 a.m. when the bond market opens. Because I think that's something that folks don't think about. Like the bond market's open from 8 to 5. We definitely put in the extra hours versus equities. And, I'd be on the train commuting to work, writing on my phone this blurb to try and get it in if I was ever late. And that really stuck with me because, if I was running Mike Vogue Mortgage, like I would want someone doing that. And
Right.
so I took that kind of like experience, that training, and a lot of folks on our desk still do that today. And we actually used all of our data, which is what I was doing anyway, right? But it was a lot of human insight and intuition and data manipulation in a spreadsheet that now is just done every time you refresh the site, and that blurb it pops up. And so it took something that was like hey, a human learning experience, but then kind of embeds it in our product, right? It makes the product a little bit better, a little bit smarter, and saves our clients time.
So talk to me a little bit more about AI and where else do you see applications of AI? Because I think to your point, yes, it took a very arduous task, made it much more easier and digestible for people. But to your point earlier, you still have to have subject matter expertise to get to that point. AI is not, the example I always use is AI can do programming. Well, I'm not a programmer, so even though it could write code, my code would suck because I'm not a programmer. So, to your point, you still have to have capital markets expertise, but now you're leveraging AI to create much greater efficiencies and putting it into the hands of your customers. Tell me some other applications and some other uses that you see where AI could continue to evolve and expand in capital markets.
Oh, totally. And there's a lot of meat on the bone here, but I think you have to be um, really cognizant of what folks are doing with AI. It's not a panacea. Like it's not going to
Yep.
solve all the world's problems. It has to be practitioners behind the scenes who understand it, and there has to be expertise that's going into it. A funny story that I'll tell you is, when we started iterating with this, there's a lot of like training we had to do with the models, right? And
Yep.
even things such as simple math sometimes does not come out of it the right way because it's a language model, right? You might
Exactly.
you might be able to search the internet and find somewhere where 2 + 2 = 5. And if that's out there somewhere and that's what it's being trained on, then that could feed into some of the math functions, right? So you have to have folks who had that experience to kind of build these models around that. Where I see this going more is definitely more in this assistant type role. And I think that's what we've been hearing from our clients, right? A lot of them have had, like I mentioned earlier, a lot of consolidation. They're asked to do more with less, and with that, you lose some of the ability to say, hey, I want this team of quants who are going to look at what projected locks I'm going to have and help me fine tune my hedge or my fallout. You lose the ability to say, hey, I'm going to sit here and come up with the best hedging strategy or the best pricing strategy. So what we've been doing and where I think a lot of the industry will go is moving more towards these assistants, right? A lot of this stuff still takes seasoned people to operate. You got to trust but verify, check this stuff. But being able to kind of sit shotgun, take a lot of data and put it into a story so that somebody could say, okay, well, instead of having to, make a pivot table in Excel and create all these fancy Excel lookups and formulas, I have this assistant that just does it for me, right? Almost
Yep.
replacing that junior person, right, or that team of people that you would have to help summarize data. And just another like plug on some of the things we're offering. It's part of partnering Gen AI, right, which is powerful, with other pieces of AI type software like machine learning, for
Machine learning.
example,
Exactly.
because that's where you could help with a lot of the math problems. And I think that's where you kind of get that mix of both things that might be that panacea we talked about earlier. Another thing that came out in our press release last week was something we called our trade assistant. And so this is a combination of kind of both those technologies where, again, it took a seasoned cap markets person to kind of look at your risk exposure and say, hey, what am I supposed to do here? Should I be selling this type of security, buying this type of security? Is this the optimal time to be doing something? Did the market move? And is this actually a liquid instrument? And so we took a similar approach to that profitability assistant where we're taking all this data, we're using some machine learning principles on it, and then using things like Gen AI to kind of create this suggested trade for people. And our idea here isn't to replace anybody, but to give folks that like that eye in the sky or that helpful, person hitting you on the shoulder and being like, hey, did you think about this thing over here? You've got a thousand other
Yep.
things going on. You're going to these meetings, you're doing this, you're doing that. But did you think about, this guy kind of hiding in the corner over here? And I
I
think
think those are
that's where
such
you're
good
gonna.
examples of,
Mhm.
Using AI, the quote that I use a lot these days is AI won't take your job. People who know how to use it will. And you need that subject matter expertise. You need that knowledge base. And then leveraging these tools can be very, very powerful. Mike, you and I could talk for hours. You have so many great insights. You are welcome back anytime. As we wind down, what's on the horizon for Optimal Blue? What do you see coming, the rest of this year, early next year? What are some of the things that Optimal Blue's bringing to the market that you think can really transform things for people?
Yeah, I think you're going to see us continue to kind of build upon this assistant kind of product style that I've been talking about. There's things out there that take a massive amount of time in a cat market person's life, and then that also leads to less time thinking about strategy. And so what we're trying to do is continue to add a lot more of these assistants to people's time, right? So think about how, things like creating your pricing that you put out there in the street, right? What if there was that assistant that helps with that? What if if there was the assistant that helps with explaining to your accountants why things changed over the course of the month? Also, between all the data that we're sitting on, what if you were an executive and you just wanted to quickly know, hey, how's my business doing over the course of this month,
Right.
and then how's it doing versus my peers, right? We have such a large market share. I think you're going to see a lot more assistant type things brought to us, brought from us. And then it also kind of goes into general just usability, right? Like our product and pricing engine and our hedging system, are both market leaders from like a market share perspective, but they're very granular, robust systems. If it's not AI, where else could we add more automation to make this stuff easy without losing that quantitative horsepower? So it takes shorter time to implement, shorter time to roll out new things, shorter time to run complex analyses. I think you'll see that in conjunction with a lot of AI assistance from us over the course of the next 6 to 12 months.
I love it. And if people want to find out more about these assistants and all of the things that Optimal Blue is working on, what's the best way that they can get a hold of you?
I, Come find me on LinkedIn. I have a fairly active LinkedIn presence, so folks can communicate with me there, and then I have my contact information on there as well if folks want to reach out personally, either via email or direct messages on there.
Mike, thank you so much for being a guest on this episode of the FinTech Hunting Podcast.
Appreciate the experience. Thank you so much.